You know it, investing is not always easy. Some have even lost their money while trying. But, even though, you still want to make your money grow quickly. You want to anticipate the future. With these uncertain times we know, you feel that strong desire to build a good retirement plan. You want to build a significant and stable capital. You want to manage your financial assets better, or maybe you just want to increase your purchasing power quickly. In this video I give you some tips that will allow you to grow your investments quickly. I give you some tips that will help you avoid taking unnecessary risks, tips that will help you avoid losing large sum of money when investing. Are you interested? Then let's get started. If you want to grow your investments quickly so that it will be profitable to you, then you have to make good choices. And if you don't keep anything from this video, I want you to remember this. If you want your money to grow optimally, if you want your investment to be profitable, make the right choices. And that starts by clicking on the subscribe button, so you don't miss anything every time new contents are available. If you want to make good choices, you must have clear goals. Before you get started, you need to clearly define your goals. Understand what your priorities are. This will help you to avoid making wrong decisions that could make you lose all your money in a short time. You must set clear goals, determine exactly why you want to invest, what are the goals you want to achieve. You should also define the timing. That means you have to ask yourself, after how long do I want to achieve these goals? Is it after 10 years? After 20 years, 30 years or more? It's up to you. All your investment decisions, strategies and methods will be based on these goals. Regarding the timing, you have to know that you don't invest for the short term, so when we talk about investment, at least if it is a serious investment, an investment where you want to make the most of it, then this investment will be made over the long term. You have to anticipate the future and invest now. However, in this video, I explain how you can profit quickly, though it is in the long term, and how you can maximize the gains. I show you how you can reduce the mistakes that could make you lose a huge amount of money. When you invest, you don't invest all your money at once, since the results will only be visible in the long term. You have bills, you have to feed yourself, you have to take care of yourself. In short, your life has to go on, and you don't need to invest a money that you intend to use in the next few days. Otherwise, your results may not be stable. Because when you invest, it can happen that the first few days you start losing money. But very often, this is just an impression. In the long run it should increase in value if everything goes well. So, make sure that the amount of money you invest is money that you won't need in the next 2 or 3 years at least. If you see that you can't live without it, it might be better not to invest at this time. You're probably better off continuing to save so that you're better prepared. Otherwise, you may get frustrated. Invest for the long term. And when you invest, you should always have some sort of working capital, some liquidity. This will help you boost your investment better when you need to. But then, be careful with the size of your liquidity. You don't want to have too much cash, because having too much cash limits your investments somehow. So, it's good to have some liquidity, but not too much of it. Anyway, if you want to know more about the relationship between your liquidity and your investments, I'll put a link to a video in which I explain this in much more detail. The link will be somewhere in the description or at the top of the video, so if you want to know more, check it out. Anyway, you need to invest for the long term. You can start with a goal that you set for 5 years. It's true that 5 years is not necessarily long term. It's much more medium term, depending on the field you're in. But it's already a good start if you're taking your first steps in investing. This can help you assess your progress and development on some of the goals you've set for yourself. And it can also motivate you along the way, especially when you get good results. That you will see the results of your good choices after 5 years will encourage you to continue and to do better. You will also be able to see the mistakes you made and try to correct them. But I think that a 5-year objective can be reasonable for a start. If you are just starting out in investing, you won't necessarily set goals for 30 years, but you can set goals for 5 or 10 years. I would advise you to invest in 2 or 3 areas for 5 years, and make the rest of the investments over a much longer period, as it should normally be done. And when I say objective, I mean objective. I'm not talking about passion. I'm not saying that passion should be completely discarded. No. I'm just saying that investing requires reasonable choices. So, even if you are passionate about a field, invest according to your goals and stay reasonable. You need to invest in your area of expertise, in your comfort zone. Because when you invest, you need to know and understand the basics of the field you are investing in. You need to understand what the pitfalls to avoid are. You need to have an overview, even if for a start you are not necessarily going to know all the details, all the mechanisms and so on, but you still need to have some overview. And that's why it is advisable to invest in your comfort zone, since in your comfort zone you already have, at least, the key basic in the field. Remember, for a start, it is always better to avoid a certain number of hassles. Don't invest only because your neighbor did. This takes me to the next point, which is related to this one. It's about training. And this is really critical. You need to get trained if you really want to grow your investment and get good results quickly. It's like with everything in life. If you want to succeed, you have to learn first. The dentist, the pilot, the lawyer, the architect, all of them have to get trained first before they start practicing. Why? Because they want to get good results. And why don't you do the same with your investments? Your money is precious. Don't waste it for nothing. By getting trained, you are investing in yourself, and that will serve you for life. The training will help you obtain good results quickly. Do not neglect this aspect. Get trained in the areas you want to invest your money in. You need to understand how the field works. Understand what levers you need to use to make your investment grow so that you really make money. Get trained to understand how to analyze the different signs and indicators you have at hand, how to interpret the different information you receive, how to choose the best investment, and so on. You also need to get trained to learn more about taxes. Try to understand the types of taxes, how they work. You need to learn about debt, how debt works, how you can use debt to invest better, especially if you want to invest in areas like real estate. This will be very useful for you. It's true that it requires some financial education, but you have to learn. It's really worth it if you want to get very big profits quickly. Find out how you can acquire more capital, how you can raise money for your project, if you are going to set up a project, and so on. Learn about insurance, learn about accounting, about lawsuits, and law in general. More specifically, as related to the area you want to invest in. Learn about liquidity, and so on. In short, if you want to maximize your results, you really need to learn and get trained. You can start right now by subscribing to this channel if you haven't already done so. We can walk you through the training process. So, go ahead and hit that subscribe button. Turn on all the notifications so you won't miss anything. By the way, let us know in the comments which of these topics you would like me to explain in more detail in a future video. Another piece of advice I have for you is that, if you want to see your money multiply and increase your buying power quickly, you need to avoid blind competition with other investors. As strange as it may sound, it often happens that some people, when they start investing, base their choices only on the decisions of other investors. Their decisions are simply a blind imitation of the choices of their neighbor, who also happens to be an investor. If the neighbor makes a certain choice, they try to make the same choice. When the neighbor backs down, they do the same. Things should not work that way. Remember, we said that your investment decisions should be based on the goals you have set for yourself. Your neighbor may not have the same goals as you. His timing may be different from yours. Their portfolio may not be the same as yours. You probably have different investment experiences and assets. The levers they use may not be the same as yours. Their working capital is probably different. In short, their investment is not yours. Everyone has their own investment, their own strategy, their own methods, their own resources, their own tools. You can be inspired by the choices of others and adapt them to your context, without necessarily copying and pasting blindly. You must avoid putting yourself in a kind of competition with other investors, especially if you are new to the field. It is those who already have some experience or authority who can afford this kind of behavior. And even if they do, it is always with a certain degree of risk. So avoid getting into a foolish competition. When you start investing, you need to be well motivated. Managing financial assets is not always easy. I'm not saying this to discourage anyone. It's to encourage you. And to let you know that motivation is also essential because after all, you are the one who invests, you are a human being. And you have your own feelings and emotions. But these feelings and emotions can vary, depending on the situations you encounter, the situations you have to face while you want to multiply your money by investing. Again, the results are not linear. At times, the results can be spectacular. And at other times, they may seem to slow down. And then, all of a sudden, go up again. In between, you may face challenges. But, stay motivated. Do what you have to do. Do it the right way because at the end, there is a result that will make you happy. Your investments will pay off. At the end is the reward for your efforts, your strategies, and the good choices you made. Be patient, apply the advice you receive, and you will maximize the fruits of your investments. Then, you will be proud of yourself. So, keep in mind that you must stay motivated. Don't underestimate yourself. Don't underestimate your ability to do well, to make good choices, especially if you follow our advice. You can make it. Yes, you are capable of it. Stay motivated. It doesn't matter how hard it is. Just adopt the right strategy. When you invest, if you want your investment to generate a lot of profit as soon as possible, then you have to choose the sectors you invest in carefully. Not all sectors grow at the same rate. There are some that will allow you to multiply your money faster, others, a little less. So, choose your investments in sectors carefully. You can, for example, prefer sectors and areas that have a strong service potential, areas that serve a greater number of people, a maximum number of people. Because the more people are served, the more value they place on the field, and the more money there will be in that field. Invest in areas that are growing well. It's also a good idea to broaden your portfolio and invest in several areas so that if one area is struggling, it won't affect all of your investments. You can continue with the others. You can invest in the stock market to make your money grow. This is one of the most popular methods. With the stock market, you have three main choices. You can invest in stocks, you can invest in bonds, or you can invest in stock indexes. With regards to stocks, a share represents a fraction of the capital of a company or a corporation. And some shares are listed on the stock exchange. And when you invest in a stock, it means that you own a certain part of that company based on that stock. And you can also receive dividends. When you invest, since the stock price is not linear, it's a good idea to wait for the stock to go down a little bit in value for a while, and then you buy it, hoping that the stock will go up again. And then you can make a profit. But you should be careful, because sometimes, when the value of a stock goes down, it can also be a sign that the stock is really going down forever. And that it will never rise again. If you invest in such a stock, you will obviously lose. So before you buy any stock, make sure those low prices are not in the middle of a never-ending decline. Depending on whether you are a passive investor or an active investor, it may be worthwhile to carefully evaluate the company you want to invest in to assess its financial health. You can analyze the productivity of this company and try to see if it will still be growing well in the long term, and so on. If you want to know the difference between a passive investor and an active investor, I've explained this in more detail in another video. I'll put the link in the description. You can check that out at the end of this video. Bonds are safer than stocks, but also, the return on your investment is lower. They represent debts. They are loans where the investor is the creditor. And this extends over a certain period of time. It can be medium or long term. Once the period of time has elapsed, the company or the government to which you have lent a debt will pay you interest, and this will increase your capital. Stock market index represent a group of shares. It can be a group of shares of a country, a zone, or a specific sector. You have, for example, the S&P 500 or the Dow Jones. There are many others, depending on the country where you are. A stock market index represents an average of the values of each of the companies included in the index. And when you put your money in, your money is spread out over all the companies in that index. That means that, for example, there are 500 companies in the index. And you put in $1,000, then your $1,000 will be divided among the 500 companies in that index, based on the percentage that each company represents in the index. If, for example, one company makes up 1% of that index, then 1% of your $1,000 will be sent to that company. If that company represents 2%, then 2% of your money will go to that company, and so on. You should also remember that the growth of your investment in the stock market depends on several factors. For example, the type of financial instrument in which you invest your money. Do you buy stocks or bonds, or do you opt for indices? The amount of money you allocate to each instrument will also determine the gains you can make. The strategies and methods you choose also matter. Do you go in as an investor, or do you go in as a trader? This will also play a significant role. And if you want to know more about the difference between a trader and an investor, I'll link a video where I explain that in detail. The link will be in the description. Another way to make your money grow is to invest in real estate. You can buy a property at a more or less affordable price. And after a certain period of time, the price of real estate will increase. If we look at the last 30 years, we notice that the price of real estate, in a global way and in spite of the crises and other contrary factors, shows an increasing curve. So when you buy a property, over time, the value of your property will increase. And that's how you'll be able to sell that property for more and make a lot of money. It can be a house, or it can be a rental property. And you can simply rent it out again to build up your assets. You'll have a regular and stable income, depending on your conditions. Maybe it's monthly, quarterly, or whatever. It all depends on you. On the other hand, you have a lot of tax advantages when you start investing in rental property. This will help you increase your income even more. If you want to multiply your money quickly, you should also consider cryptocurrencies. There is still debate today about this somehow new form of investment. Some people think that these virtual currencies can disappear overnight, and that it's just too risky to put your money in unless you want to lose everything. Others think that this is a futuristic currency, and that you should look ahead to the future by investing in it as soon as possible. Some even think that it could help them build a good retirement plan, and that the first to invest in it will be the new bosses. Whatever the case, cryptocurrency is indeed taking an ever-increasing place in the world of investing and trading. You can explore the field to have your own opinion on the matter. This is also an opportunity here to remind you that you should only invest money that you can live without in the next few days, and money that you can lose without being destabilized in your finances. It must be recognized that with cryptocurrencies, the volatility is quite high. Remember, investments are not a 100% guarantee that you will always make a profit. In fact, it's the same with almost everything on this planet. Isn't it? So what are you going to do? Are you going to stay paralyzed by the fear of losing your money, or are you going to decide to invest and apply the tips we've given you to make your money grow and try to maximize your results? The choice is yours. Tell us in the comments what you prefer. If you've learned something new today, then give this video a like and share with a friend. Manage well.